So, welcome to Wise Wealth Podcast, Lars. It's amazing to have you. For everybody here, if you can, it'd be great to have an introduction about yourself and find out a little bit more about you.
Yeah, thank you for having me. Very briefly, I spent a long time in TradFi, working a few years in London, and in 1992 I was co-founder of a financial company that eventually grew into a bank, Saxo Bank, and I spent the subsequent 26 years with that business before finally selling my last shares in 2018. Saxo Bank was an early internet adopter, so we made one of the first online trading platforms in the world back in the 90s. And had a reasonable degree of success with that, both directly and through white labeling with other financial institutions that use the platform for their client groups. Obviously, when you've been through one sort of transformative technology experience, which was the internet back in the day, you keep looking for the next one. So I was introduced to Bitcoin and blockchain fairly early on. I think I bought my first Bitcoin in 2011 or 2012, and I followed that space for more than a decade and have gotten increasingly interested in it. So for a number of years, I've been investing in that space, most notably in our own layer one that I founded in 2018, Concordia, but also a whole range of other investments in the blockchain space. And I do that because I see some similarities to the internet experience, a new technology with transformative potential, a lot of skepticism early on, low adoption, and the internet was exactly the same, although that can be difficult to understand today, but a lot of skepticism, and this thing will never work, and you're wasting your time and money. And some of the arguments you hear in blockchain today.
We've got so many different areas to talk about there. I think Saxo Bank's very interesting because a lot of listeners here are FX and stock traders that trade through MetaTrader 4 and 5. So I think that's a cool area. But also, I suppose it's a hot topic at the moment is the whole Bitcoin ETF. There's supposed to be flooding the markets with over 100 billion. So that will be interesting to see. So I suppose, which one do you want to talk about? Should we jump in and have a chat a bit about Saxo Bank, or do you want to talk about Bitcoin ETF and the blockchain side of things?
Yeah, you're the boss here, so you decide. But I mean, Saxo Bank is kind of history. I sold my last shares in 2018. It was a great adventure. I think some of the learnings from adopting the internet and seeing that grow to sort of be everywhere, I think are quite relevant for what we're experiencing in blockchain today. And I think gives hope because a lot of the skepticism and down periods we also experienced back then, and we all know how that ended, right? So I think let's focus on today. ETFs. Well, it's an interesting conversation about these US-based ETFs. I mean, we have had for years ETNs and ETF-like instruments in Europe. There's probably about 150 of them with a total 4 or 5 billion in them, I think. So it's not that much news in this end of the woods, right? Obviously, the US is always going to be the US, and I think it would be beneficial to the market with a SEC finally approving the first ETFs, but I'm not sure that it's going to be that big of a revolution. But of course, for institutions that today find it difficult to be in this space for regulatory reasons, for custody reasons, etc., for them, of course, it will be a much easier way. So it is possible that there's a stream of money sitting there waiting. It would have been better, I think, to have it back in 2021 when the market mood was different, because right now it seems it's not the market itself that's particularly bullish, it's the expectation of this ETF that drives Bitcoin, and it will probably be more healthy the other way around. But I think it will come. I don't think it's going to come as soon as some people think, because SEC obviously has serious concerns around it, but eventually I'm sure it'll come.
Yeah, I mean, look, it was literally only yesterday that Bloomberg was saying that the Bitcoin ETF spot market is set to hit 100 billion if the ETF is approved. So they're basically saying that the market will be 100 billion in the current market valuation, which is pretty crazy. And I suppose that then opens a big old floodgate there for the sort of big major financial players to get on board.
Yeah, I think the argument for Bitcoin is like it would have been for the internet for that matter in the 90s. You probably should have a little bit of your portfolio in it just in case it takes off and you don't want to be left on the sidelines, right? But I think when I hear from institutions, I don't hear that great urgency to actually get involved that you had maybe in 2021. But what always facilitates the market is that there's a framework around it. A listed ETF would obviously be an approved instrument. The fact that we're beginning to have also serious derivatives markets around it is very important for driving adoption, because without derivatives, there's a lot less incentive to get engaged. And here I don't mean DeFi, but sort of more regulated avenues for real institutions to get involved. I am a little skeptical as to whether this will be a massive flood of money, because I don't hear that sense of urgency out there the way that I maybe did 2 years ago. But it is obviously a much easier way for a pension fund or a hedge fund or somebody like that to have a small allocation in their portfolio, which I would recommend. Just like you have a small allocation to art, or you have a small allocation to other unusual assets. I think it would be prudent to have a small allocation in this space, and Bitcoin is kind of a proxy for the entire space, right?
Yeah, no, I agree. So I suppose what are you currently doing within this sort of blockchain area now? And from your perspective, where do you think Bitcoin is going? I think it's a great topic, great discussion. There's been some wild predictions. What's sort of your background and thoughts on it?
I'm not a Bitcoin maximalist. Obviously this should be supported for price if it gets easier to invest in it. But I also think Bitcoin faces other challenges, regulatory stuff for real world adoption, the energy question, which is a big topic in society today. So I'm not a maximalist. I think there actually are more interesting projects being built out there at the moment. But of course, Bitcoin has an early mover advantage. Doesn't mean that it will win for that matter. Doesn't mean that it'll become gold 2.0. For that reason, gold has a 40,000-year history and Bitcoin has a 15-year history, and we've seen many assets trying to take the place of gold over the years, and normally that ends pretty badly. So I think there's a short-term argument with all that's going on in Bitcoin, but I do have some skepticism around the long-term importance of Bitcoin. I think there are actually more important things in the blockchain space today.
Yeah. I think it's a really interesting one, because obviously when you talk with yourself from like a lot of experience, and then you talk to some of the youngsters out there and you talk to them, what would you rather have, Bitcoin or gold? They're all talking about they would rather have Bitcoin. And I think it's literally that's their go-to on what they want to have. It'll be interesting to see if that shift happens. Obviously there is, like you said, a huge amount of history of having gold as that, ultimate hedge in the markets. But I think with what's going on politically within the world at this moment in time, and there is a large amount of printing going on, large amount of budget crisis, should we say, at the moment within the US. And I think ultimately moving to something like Bitcoin does look attractive, because there's no one sort of meddling in the printing and so on and so forth of it.
No, I think there could be an argument for it, and there's probably also a generational difference. I don't think it'll be the preferred store of value for sort of older investors, but there is an argument for a young generation trying out something new. We've seen that before. As I said, it doesn't always work out. But gold has always been a true store of value, right? Even back to sort of the Greek city-states, they actually had these big chunks of gold lying in in their treasuries, but they didn't use them for payments until about 650 BC. They just had them, and they were paying with cows and grain and whatever else. So they never used it as anything other than a store of value. But there was agreement that it was a store of value, and they would kill each other to have these chunks of gold in their treasury, right? But and of course, Bitcoin has a lot more functionality. It can be used as a direct payment, a means of payment, but it doesn't have that long history, and it is a piece of code which is highly dependent on us agreeing that it has value. I mean, I've seen Bitcoin at very much lower values than this, and in those times, people agreed it had a value less than $100. Now we have agreed it has a value of $37,000, but whether that sustains, I mean, you really need a century to see that, and in the meantime, it's speculation, right?
Yeah, no, I agree. It's definitely a speculation. So you said before we started this that you think there's more exciting projects out there that you think are, could be adopted. What sort of projects have you sort of been working on or got in mind?
Well, I think here I think more about the general application of blockchain rather than the speculation aspect. Crypto is like an accessory tool to make blockchains work, to incentivize people to do desirable things like the consensus layer, etc. Right? And it's only really because of lack of adoption of real-world use cases, I think, that crypto has taken the front of the car. Right? It should be the other way around. It should be real use cases that drove some demand for tokens, and I think that will come. And that's, for me, the interesting thing. I just came back from Nigeria a couple of days ago, where you have very high interest in crypto. I think it's the country in the world where second most people have interacted with crypto. And there's an interesting change there, because a couple of years back, it was Bitcoin and Ethereum, and today it's largely stablecoins. So it's more a question of preserving wealth against the ever-falling local currency, the Naira, which has dropped, I think, 40% this year, and people just don't like having this money, because if they don't spend it today, it's worth less tomorrow. So there, it serves a real-world purpose of protecting wealth, but it has moved down there, and I think that's kind of a proxy for how many people look at it more to stablecoins. So very, very interested in new stablecoins, whereas after the market enthusiasm for Bitcoin and Ethereum with that volatility is much decreased, right? So it's a different thing people are looking at in those areas, at least.
It's so funny you say that. I literally was doing a podcast the other day with a Nigerian venture capitalist out there. They're public on the Nigerian stock market. They look after 300 million, and they've got a digital bank out there, and they're adopting the whole stablecoin approach, because the banking out there is very difficult. For Nigeria to sort of engage in the Western world and do bank transfers and things like that, it's nigh on impossible. But yeah, the stablecoin process does look like it's definitely having that sort of stickiness use case, especially within the African regions. And I think maybe that's where the stablecoin side starts. What's your opinion on the US government looking to launch their own stablecoin? Do you think that would have uptake, or do you think that sort of goes against the whole purpose of having stablecoins?
No, I think that's fine. I mean, you want efficient payment mechanisms. I think the argument that people have for having Bitcoin rather than the dollar, which could be valid. I'm also concerned about the long-term outlook for U.S. economy and budgets, and that won't change because you tie to a digital dollar. For that matter, you still have the same concerns because it's going to stay one-to-one. Interesting, not to make this an entire discussion about Nigeria, but they launched the e-Naira a couple of years ago, which of course has some technical benefits in that it's easier to transfer, etc. But it hasn't gained much adoption because it has the same problem. If you don't want to hold the Naira, you don't want to hold the e-Naira, right? And I guess if people get seriously concerned about the dollar, where we are not at this moment, because at the end of the day, everybody shifts back into USDT and USDC whenever they're not speculating. So this concern about the dollar doesn't really reflect itself in people's actions. But if people are seriously concerned about the dollar, which there could be reasons to be, then I don't think an electronic dollar will be any different from a note, right? So I think it's fine. I think it's good for the space that central banks are working on electronic digital currencies. There's a lot of benefits to that, obviously easier transfers, but also purposed money. You know, if you say, some countries you get a support for your kid or your health or whatever, and some people go down and drink all that money up in the pub, right? So if you could collar money and say this can only be used for kiddies things, so when you get this from the government, I see a lot of use cases for programmable money. But of course, the flip side of it is you want a benign government, right? Because if you now have all of your digital assets under control by somebody that can take political decisions with your assets, it could also be used for very bad purposes, right? So it's a double-edged sword, right?
Yeah. Why do you think regulation around cryptocurrency is taking so long to sort of go down this route and approve it? What do you think the actual underlying issue is?
Regulation always takes a long time. I've been through a lot of years of TradFi regulation, and it has to be that something is invented, something is being used, something is going well and something is going wrong. It gets the attention of the regulator. The regulator has to understand it. A good regulator will take input from industry participants. They have to prepare laws. The politicians, the bureaucrats have to do the laws. The politicians have to implement the laws. The laws have to be implemented by the regulator. So by nature, it has to take time. And I think it's exactly the same in TradFi. You know, we were not really regulated till 1986 Big Bang in London, and the 1996 European Capital Directive. Year 2000, you got the U.S. Commoditization Act. Prior to that, TradFi was the Wild West, and it also took decades really to get to where we are, for good or for worse, right? So I'm not surprised at the lack of speed in this. In fact, I think something like MiCA in Europe was, I think, it's a very decent attempt at first regulation, has been fairly fast compared to how things normally work in the EU. So these things take time, and they should take time, because the regulator needs to understand what it's dealing with in order to make appropriate regulation. But at the bottom line, what happened in TradFi when we got regulation? Business exploded, right? Because people were comfortable. It wasn't an elitist little market for people that understood it. It was harder to be a victim of crime and fraud, and if you were, you had some redress by going to a regulator, and that just made people more comfortable, so that the average guy now sit and trade stocks, right? He didn't do that 30 years ago, right? And that is very good for Saxo Bank, and it's very good for a financial institution in general. And the flip side of regulation is adoption. And hence, I think to really see mass adoption of this space, there needs to be some regulation in place. We can hope that it's a sensible and benign regulation that also wants to develop the space. But without that, you're not going to see mass adoption, because people won't be comfortable, and certainly bigger corporates can't interact if there's no regulatory framework, let alone financial institutions, which I think would love to adopt blockchain in many ways, because there's so many processes it could make cheaper and more efficient and safer, but they can't do it without regulation.
Yeah, no, I couldn't agree more with you. So basically, it's just a time thing on, hopefully, that the regulation is there. And is that why you think that there is, you were saying that you feel like this is an early adoption of the internet, so to speak? You think that once regulation starts stepping in, you should have a part of your portfolio exposure to cryptocurrency, just because of the fact of how big that new market could be once these things are in place?
I think just like it would have been very unwise not to have an allocation to the internet in the late 90s, even if we had a crash in 2001, or at least after the crash, where we kind of began to see what came out of the rubble and what worked and what didn't. And maybe that's the similar thing we've been through in the last couple of years, where I think we've seen some cleanup of the more sort of FOMO, hot air type things, and a lot more serious projects. So I think if I was, and I am, sitting managing a portfolio, i.e. my own, but if I was sitting in a pension fund or I was sitting with some other responsibility with people's money, I actually think it's bordering on imprudent not to have a moderate allocation to that, not 20 or 50% of your portfolio, but 1, 2, 3%, because you need to have a couple of outliers that could produce over normal returns in any portfolio. There, of course, Bitcoin is a nice, simple proxy for the entire industry. But in as far as people could get involved in real-world blockchain projects, and that's a little bit harder because these are not as accessible, traded private in private placements, etc. That would be preferable. But I'm sure Bitcoin is seen as some kind of representative of the industry, and hence is the easy choice.
Yeah. No, very interesting. So I suppose from what you're doing now, you're working with Concordia Foundation. Can you give us a little bit more info on that and sort of what the goal is for Concordia Foundation?
Sure. As I said, I was fairly early adopter and was quite the ambassador for Bitcoin in financial circles way back when I guarantee you I was the only banker in some of these nerdy conferences, right? And I knew the Ethereum guys before they launched, so I followed the space a long time. And I've always been a big believer in the underlying idea of decentralization, because I've seen a lot of centralized shit go wrong in the financial sector in particular, right? That being said, I also think it's, and I have thought for a long time, that it's a given that anything that looks like a financial asset, anything that's being used for transfer of value, will and should attract attention of the regulator, and that's what's happening now and has been happening the last few years. Wasn't an awfully popular message back in like 15, 16 when I started talking about it, but I think most people are coming around to understanding that you cannot expect to live on an isolated planet blockchain, nice as it would be. I'm a bit of an anarchist and libertarian myself. I'm not super keen on having the government and the state all over me, but that's the way the world works, whether you like it or not. And Concordia was an attempt to bridge the two worlds. It's a layer one, like an Ethereum, if you will. I think we did a number of technology improvements, which is natural when you have something to learn from. But it's also an attempt to build a layer one where you can facilitate this upcoming regulation and the legal framework that will undoubtedly be put in place across all jurisdictions over time. So yes, we fix some scalability things. We have finality, which I think is an under-discussed subject, because blockchains are not as secure as sometimes they hold themselves out to be, but with finality they are. Stable fees, predictable fees, a nice balance between accountability and privacy, and generally just a good blockchain that is made for also accepting the world around us and make it easier for people that need to take these things into account to engage in a way that they're comfortable with and they have trust in. But essentially, it's a layer one. It is a good, scalable, cheap layer one that works. Run now near 10 million blocks without incident. It has finality, so it cannot be rolled back, in contrary to some other. Most blockchains, in fact, right? And it has a fee structure that means you can predict what fees are going to be down the line, right? So you might make a great business model that worked fine on Ethereum 4 years ago, but today would be crucified by the fees, right? And hence you then have to go to layer twos to achieve scalability, and you all of a sudden are moving back to the old failure and things that needs to play together, and where you do compromises with security in some places. I like to build a layer one that handles these essential base things, so the layer two can concentrate on innovation and building on a strong environment. So I see it a little bit like building the internet. We're not building Saxo Bank or Google or Facebook or whatever, but we're building a base for them to interact with confidence, right? As are other people in the layer one space. But I just think that we're trying to combine it with some business experience and some experience of how regulation has unfolded over decades and is very likely to continue to unfold.
So are you doing this as a core team, or are you acquiring businesses within that space and then building them up, or how are you doing that in a shift? Because I was having a look through your website and there's quite a lot that you're actually working on. You've got like Web3, you've then got a different focus on greenwashing and that side of things, and I think there was even something else on climate as well. So how are you intertwining all of these different layers?
We have a core group of very good scientists, which I think is important, 30, 40 scientists across universities. We have about 65, 70 employees directly in the company, tech people, commercial people. So it's sort of I would say, a pretty solid organization. Again, our job is to build an infrastructure that is helpful for people that want to build use cases. So we have then seen, particular uptake in certain areas like, ESG, carbon credits, areas where people think that our blockchain is suited because of this possibility of identifying what's going on in a secure manner. And of course we support these use cases, help them with technology integrations. But the great big ideas out there should come from people that are building the projects and the layer two solutions, because we're just trying to provide a rock solid base for them to interoperate with and to build upon, right? But of course we support it, and that's kind of the other part of my activities in this area. I do invest in a number of projects, mostly on Concordia, but also on some other blockchains, because I think they're good ideas, right? And that's a different thing to build than to build the base layer one, which is a pretty big job and that we spent years doing. And I wouldn't recommend to my worst enemy, focus on the projects and let us handle the deep infrastructure, because that's pretty complicated if it really needs to be real solid and safe to interact with.
Yeah, for sure. You was talking about earlier about having a slice of crypto in your portfolio. Now, I suppose, what's your thoughts around Web 3.0, and do you think that's also going to be a big boom, and what's your sort of thoughts behind Web 3.0?
I think Web 3 is a loosely defined term, right? And in many ways it looks a lot like Web 2, particularly in the client facing user interfaces, and that's probably wise, because I think what people are used to using is the best way to engage them, and then you can anchor, maybe even invisibly, you can anchor a lot of what you do there much more safely in the blockchain, right? So I think Web 2, Web 3 is a bit of it's a very mixed bag at the moment. I think actually Web 4, which people are beginning to talk about, the combination with AI and blockchain and virtual reality is a bigger step than what we currently call Web 3. But absolutely, I mean, I see very little question in my mind that we will be spending more time in virtual environments. We will want to experience things that we don't experience in the same way in everyday life. This includes going to shops that's not in your city. It includes crazy metaverses. It includes gaming. I mean, we already know that this works, right? The gaming industry is massive, and to some extent that is metaverses, and we got 3 billion gamers in the world, right? So clearly people want to engage in these new environments, and as quality gets better and better and near indistinguishable from what we call the real world, which I think is going to be a mixed bag in 50 years' time. Clearly people are going to use it more. But again, that and AI raises significantly the opportunities for fraud and misrepresentation, etc. And their blockchain plays an important role to anchor, who's who owns what, is it duplications of these ownerships, or are they trustworthy? that's the role for blockchain, to underlying support all these new environments with much more security and safety than we have in the current Web 2 world, where fraud is everywhere, right?
Do you think we will naturally move away from that whole centralized to decentralized in the near future?
Well, I agreed with the sentence until you said the near future, but I do think we'll move in that direction. But things always take more time than us enthusiasts like, right? I think Bill Gates said it very well. You know, you always overestimate what will happen in 2 years and underestimate what will happen in 10.
Yeah.
So I don't think we're talking any near future here, but that decentralization makes sense and will, I think, increasingly become a consumer demand for their own safety. And once they fully appreciate the added safety and security it gives them, I do believe in decentralization. I think decentralization is far better than a centralized system where you have to rely on a single counterpart, because no matter how credible they are, still things go wrong, right? Lehman Brothers, Bernie Madoff, Enron, central banks. It goes wrong all the times with these centralized and the centralized institutions, and the fallout can be massive. I mean, we have an example in our own space. What is the problem about FTX? Well, that is exactly that. It's centralized, right? It wasn't decentralized. So it's ridiculous to claim that as a failure of blockchain or a failure of this industry. It's a repetition of failures of the old world, right? Through centralization and lack of proper governance and regulation.
And do you think that took a knock on the crypto world, having that whole sort of setback from that centralized exchange going under? And it was, you know, it was a lot of political connections within that whole scenario anyway. But I mean, that's sort of been at the forefront of the whole topic around crypto at this moment, hasn't it?
Of course, we took a hit from that because a lot of people lost access to the funds they were invested in. I mean, particularly from this treasury service that FTX was running. I know several use cases that got completely blown out of the water on the basis of that. So it did a lot of damage. But I just think it's important to remember that what largely goes wrong in this space is when we don't decentralize, right? When you have a hedge fund or an exchange or something that where simply there's not a rule set and proper governance in place. Of course, we get the hacks in some of the DeFi's as well, and some of the decentralized system, and that is a concern. But most of what goes wrong is actually centralized functions, which just copy what's been going wrong for the last hundreds of years, right?
Yeah. Yeah, it's very interesting. On Concordia, it's talking about philanthropy and different areas of how you're sort of doing blockchain, but adding that part in. What sort of philanthropy sort of work has Concordia been involved in?
I think normally I like to distinguish a little bit between the two, because I think a business is a business, and if you want to do charity and philanthropy, you should do it with your own money at your own choice. So it's more that we have provided infrastructure for some projects trying to build clearer donation systems, etc. And we do have because the foundation that sits on top of this is a non-profit, i.e. cannot distribute money for anything other than building and marketing of Concordia. If there's an excess there, we have put in and support scientific research in cryptography, by the way. If there was an excess of money at some point in time, then charity would be the obvious place to let it go, because it can't be paid out to me or anybody else, right? So that's mainly it. But in the core of it, I believe in building projects, creating jobs, creating interesting partnerships, creating value. And if that value at some point in time gets distributed to yourself, then you can do your philanthropy and your charity. And I like to keep those things fairly distinguished, because my philanthropy and my charity may not be the same as yours, right?
Yeah.
So why should we vote on it? You can support what you want to support, and I support what I want to support, right?
Love that. I love that. Wow. I can't believe we've actually flown through nearly 40 minutes already just having that conversation. I think we'll have to leave it there.
Okay.
But yeah, absolutely amazing having you on the podcast, Lars. Absolutely. I think it's fantastic to hear what you're up to, and just given us a wider background of what's actually going on within the crypto and blockchain markets. I think it's going to be fascinating for the listeners. So thank you so much for joining us. For anybody that's listening and they want to find out more about you and what you're up to, where can they come and visit?
The obvious place would be our website, concordium.com, but otherwise I'm personally not that difficult to find on LinkedIn or other social media. If you have some good project that you think could be relevant for Concordium, you feel free to reach out to me there. I get a lot of interaction on these various social media channels, and on the website you can also see all of our various media channels for our community. So I would say the website's a good place to go. If it's me in person, find me on LinkedIn and reach out to me.
Amazing, Lars. Thanks so much for your time. I really appreciate it.
Thank you for having me. Take care.